Good evening and welcome everyone. My name is Dimitrakopoulos. I'm pleased to welcome you to the second event that we are organizing this week after the inaugural lecture of Emily O'Reilly a couple of days ago. This is part of a larger program of events, teaching and research that we are organizing this year and the next couple of years as part of the Jean Monnet Chair in Parliamentary Democracy and European Integration that I hold at Birkbeck as of this year, this academic year. A few things to say before we start. Obviously, this is a public event and we welcome everyone who has joined us. If you have any questions, please type them in the chat facility on the right-hand side. I will aggregate them when the time comes and present them to the panelists. The purpose of the event today is to give space and time to people who have been involved in the management of the crisis in Greece and broadly in the Eurozone to reflect on their own experience and to share them with us. Since we have at least one serving official, I should say that Mr. Costello, who is one of the panelists, will speak in a purely personal capacity. He's not here to reflect the opinions of the Commission, the view of the Commission, so he's here as an individual. And he's one of four members of the panel, which I would call stellar, and I'm very pleased they have all agreed to speak to us this evening. I will start from the practitioners first and foremost. Georgette Lalis used to head the Athens office of the task force created by the European Commission in order to assist the Greek authorities with the implementation of a number of reforms included in the bailout agreements, which most Greeks call memoranda, MOUs. Declan Costello is the Deputy Director General of DG ECFIN, which is the part of the European Commission that deals with economic and finance issues, and somebody who has been involved directly in the making and the implementation of the three bailout agreements between Greece and its partners and creditors at the same time. And then closer to the academic side of the spectrum, Dr. George Chouliarakis from Harvard, although he's presently based in Athens, has been teaching the economics of European integration as a Jean Monnet lecturer at the University of Manchester prior to becoming a member of the negotiating team under the Tsipras administration that negotiated the third bailout agreement, and then alternate finance minister in the second Tsipras administration in charge of carrying out a significant part of the third bailout agreement as a minister. The final member of the panel, last but not least I should say, is Professor Kevin Featherstone, who holds the Eleftherios Venizelos Chair in Contemporary Greek Politics and is a Professor of European Politics at the London School of Economics, and is a prominent commentator on all things that relate to Greek politics, Greek political economy, and European politics as well. What I have asked them to do is to reflect on their own experience from perspective that they served as active participants, and in Kevin's case as a commentator, as an academic scholar. We will start with Kevin, whom I have asked to present a few ideas about how we got to the crisis in the first place. Then Mr. Costello will take the floor to tell us his own reflections on the bailout agreements and how the programs, the successive programs, have worked in practice. Georgette Lalis will follow with perhaps the lesser known part of the process of that past decade with the task force and the provision of technical assistance. And then Dr. Chouliarakis will conclude the first round of interventions with his own reflections on the experience that he had as somebody who served in a new administration that was associated with a party that had very little, if anything, to do with the pre-2010 crisis and the policies that brought the country to its knees. So, without further ado, let me thank again everybody who has contributed to today's event. I hand over the floor to Kevin Featherstone.
Thank you very much indeed, and it's a great pleasure to be joining this panel, excuse me, and I look forward to the discussion. I'm going to try to share my slides now, and I'm hoping they, yes, you can see these. So I'm just going to give a few headlines, as our chair has asked us to, and I look forward to developing these and responding to other points in the discussion. I want to set the Greek crisis in some historical context very briefly. I think we have a legacy from the way in which the Eurozone was set up under the Maastricht Treaty. And I've called these three traps from Maastricht, three constraints which impacted on the way in which the Greek crisis was managed. Firstly, the way in which the Eurozone was constructed created something of a lock-in to an order liberal inspired policy paradigm. The Treaty of Maastricht reflected no shared beliefs concerning how to stabilize aggregate demand or how to respond to negative asymmetric shocks. It instead championed the idea of sound money and sound finances, setting aside other embedded long-term European traditions in political economy. This left the Eurozone politically fragile in the face of a crisis. Modeling the European Central Bank on the Bundesbank ignored the other elements of a national political system. One, of course, is the acceptance of burden sharing, but the European Union structure militated against such solidarity. The legitimation process was left entrenched very much at the national elections and domestic party competition level. This was the Achilles heel, as it were, of the Eurozone. In the book which I've listed there from 1999, which I wrote with Kenneth Dyson, we said in 1999 that this was the Achilles heel of the Eurozone, quote, creating a political vacuum susceptible to populism and xenophobia. And the most questionable element, I think, in the Maastricht Treaty design was the quality of the political analysis rather than the economics, the political fragility of the Eurozone construction. And as I say, I created a very, very limited crisis management capacity. As we know, it was essentially monetary union rather than economic and monetary union. There was very little of the so-called economic governance, which earlier the French finance minister Pierre Bérégovoy had championed in the late 1980s. And this reflected the European Union's comparative advantage in producing rules, rather than managing allocations or redistribution. The attempt to keep the currency technocratic and apolitical was always likely to prove unsustainable. And the rules largely proved useless in a crisis. The mix of a treaty obligation for no bailout, no expulsions, and limited instruments to act was always going to be problematic. And I can refer here to an article by my former colleague Willem Buiter which he wrote in 1993 with Cozzetti and Rubini. They argued that the Maastricht fiscal convergence rules were inherently harmful and should be disregarded. The penalties that they envisaged were, quote, unenforceable. So we had something of a frame for when the crisis erupted. Of course, it was the narration of the crisis which also constrained the short-term actions. And it was the success of a particular narrative that set the strategy and its limits. This was the narrative that the Greek crisis was essentially one of a rising budget deficit with unsustainable debt. Inherently, this was an example of a so-called moral hazard, where the blame shift was shifted into the hands of Greek politicians. The blame lay in Athens rather than problems in the Eurozone design, and the solution, therefore, was to tie discipline the hands of Greek politicians. An alternative narrative, advanced by some in Greece, but also elsewhere in Europe, would have had the crisis seen in a much more systemic context, that the Greek crisis was essentially one of the lack of competitiveness and the lack of productive capacity. That alternative narrative would have required a much longer-term strategy and a longer-term basis of support. But of course, going into the crisis, the European Union and the International Monetary Fund was not really equipped to provide such long-term support. And the dominance of the first narrative of a moral hazard meant that the political economy of domestic reform received much less attention. The task was short-term, and the task was firefighting. The event, of course, the crisis shook the domestic political system. In terms of political economy, it focused an acute question of support for structural reform. The bailouts were conditional on compliance with targets of structural reform. But the implementation raised the question domestically in Greece as to the depth and breadth of a constituency supporting structural reform, who actually wanted structural reform in the Greek domestic context. Rather, this was seen as somewhat alien, an external imposition. It created a cultural sense of victimhood. We, the Greeks, are the victims of the Euro crisis. And it created a culture of reaction rather than being proactive, with little ownership and a sense of engaging in long-term planning. Where do we want to be after the crisis? Of course, these senses were very much in contrast to the experience of Ireland and to varying degrees that of Portugal as well. A lack of legitimation for the crisis measures stemmed from a number of decisions which were taken. At the time of the first Greek bailout in 2010, May 2010, the then PASOK government of Yorgos Papandreou decided not to put the bailout to a special vote in Parliament, which would have required a 3/5 majority of all MPs. This would have, of course, sanctified the commitment to the bailout. It would have posed difficulties for the main opposition party. Later in 2011, the idea of having a referendum on the bailout was also cast aside. And when indeed George Papandreou publicly aired the idea of a referendum, that, of course, was the start of his own undoing. The crisis left the party system broken. The 2010 bailout and the decision not to go to a special 3/5 parliamentary majority created scope for what many regarded as the opportunism of the then leader of the opposition, the leader of the New Democracy Party, Antonis Samaras. A special parliamentary vote would have really put the squeeze on the New Democracy Party to either support the bailout or to step aside. But the party system was also broken in respect of the emergence after years of crisis impact by what many saw as the impossible demands of Syriza coming to power in 2015. That is, that Greece could stay in the Eurozone but end the austerity measures. It led, of course, to a sense of heroic failure later in 2015. Well, at least Alexis tried his best. He did his best for us. But what it led to was a third adjustment program, and then measures an agreement in August 2018, which created a long-term straitjacket, which pre-COVID would have meant that it would be into the 2030s before Greece would recover the levels of gross domestic product it had had prior to the crisis. There is, I think, for the Eurozone, a question here of whether its leaders did enough to support domestic politicians, successive prime ministers, or supporting a reformist coalition. Instead, different political leaders seem to be squeezed, undermined, their domestic support destroyed. In terms of shaking the domestic system, the difficulties of fulfilling the conditionality, meeting the targets, also exposed a long-term concern with the problems of national public administration. It seems that most elections in Greece since 1989, that I can remember, have been marked by questions of reforming state institutions. Well, the crisis certainly brought this into sharp relief, revealing the dysfunctionalities of public administration trying to deliver the public goods. So, have the lessons been learned? At a party political level, we've seen a shift in the Greek party system, of course. Since the experience of 2015, we've seen Syriza backing the idea of the adjustment program and the necessary conditionality. There is, in other words, a greater ownership of a reform agenda. At the European level, as has been mentioned, I think, in the introduction, we now have the European Recovery and Resilience Fund, a seeming shift of the paradigm, something in the opposite direction to the order-liberal precepts of the crisis and the German stance towards Greece. A paradigm shift, perhaps, towards a more Keynesian approach. Is it a substantive, embedded paradigm shift? Of course, it's too early to tell. This may be a bamboo moment where we have an adjustment with the fund and the Eurozone, in terms of its dominant policy paradigm, reverts to type as soon as it can manage. Even whether it is a Keynesian shift, then the strategy has certainly been ameliorated. It now has a new light conditionality. That is, the member states of the European Union can receive their funding transfers from the Recovery and Resilience Fund with very few conditions attached. Where does that leave us? My final point, Chair. I think it leaves us with questions which are not unique to Greece, but found acutely in Athens. Can member states like Greece achieve serious structural reform at home without the existence of two elements? A conditionality, that is an external discipline, what the Italians call the vinculo esterno, and secondly, a much greater mechanism for EU intervention to support domestic institutional reform to improve the quality of the delivery of public goods. I think in the Greek case, and more widely in the European Union, this is the critical lesson going forward. And I think that the reasonable judgment is that the answer is of the jury is still out on that question, that crucial question for the future of the European Union as a whole. Thank you, Chair. I'll hand back to you, Dionysi.
Thank you, Kevin. Thank you very much indeed. This is obviously very interesting and quite provocative stuff. I think the best thing to do is to remind the audience that if they have comments or questions, they can post them through the chat facility on the right-hand side. The questions will be aggregated by me later on, and I will put them to the panel. If you want a specific member of the panel to answer a question, please indicate it when you type the question. The next speaker is Declan Costello, who, as I said earlier, is the Deputy Director General in DG ECFIN, and somebody who has been intimately linked to the process of making and then implementing the 3 bailout agreements. Declan, I don't know whether you have slides that you want to share with us or not. If not, I can ask Kevin to stop sharing his in any case, so we see you instead, or your slides instead of Kevin's.
I have no slides. So
okay.
I'm afraid I don't know how to close my slides on this system.
Okay.
Perhaps your colleague could do that.
Yes,
he's done it.
My colleague has done it. Yes. Thank you very much.
Thank you very much.
Declan, you have the floor.
Okay. Well, thank you very much for the invitation to speak. So I'd like to give you a few not terribly comprehensive thoughts on my experiences with the Greek adjustment program and what lessons, at least I've drawn, for how we can approach reforms and also future potential crises should they hit the euro area and countries would need financial support. Let me just say my thinking on this is, framed by or shaped by 2 points. I mean, the first is Greece entered the 2010, the program, with a fiscal deficit of around 15 percentage points of GDP and a current account deficit of somewhere around 12 percentage points, thereabouts, over several years. So it's inevitable that there was going to be a painful adjustment. But I think, as policymaker, I think one cannot be satisfied that it took 8 years, a fall in GDP per capita of 25 percentage points, and 200+ billion euros of taxpayers' loans to Greece to sort this out. It was always going to be painful, but surely we could have done a better job. And I think it's very important to learn the lessons of that. However, I also want to say it's also framed by the fact that we did have adjustment programs in 4 other euro area member states: Spain, Portugal, Ireland, and Cyprus, and those did work, at least at face value. They did seem to work better. They were achieved quicker. The market access was restored better, and one didn't have the complete political strife that one saw in Greece. So I'm kind of thinking, well, what worked in these countries and wasn't there in Greece? Now, I should say that I very much agree with what Kevin said, that Europe, at the start of the Greek crisis, we were simply not prepared, neither in terms of our analytical tools, nor in terms of the financial instruments to support a country like Greece. But if I really look back on it, I basically think the first lesson I would draw is it's very, very important to get the diagnosis right at the start of a financial assistance program. And I also agree with Kevin when he concluded that we were basically treating the symptom and not the cause. Yes, the proximate cause was the fiscal deficit and the exclusion from markets. But the underlying reasons for the program are why Greece got itself into that mess. It was essentially due to, if you will, a failed clientelist political system, which engaged in, essentially rent-seeking behavior for their supporters. This then transferred into not only an inefficient, but a politicized public administration, which was not focused upon the delivery of efficient public goods and services for the benefit of Greek citizens, but for rewarding the clients of the parties. This then caused enormous inefficiencies in terms of impediments to do business, which affected deeply the structure of the Greek economy. It prevented companies from growing from small companies growing to be medium, large-sized companies. It led to a huge informal sector. It led effectively to Greece having an extremely small tradable sector. In effect, Greece was a small, closed economy. And if that's the, in the now what we ended up with was, because we diagnosed it as a fiscal problem, we had no fiscal instruments, and we brought in the IMF. We ended up essentially with a traditional 3-year IMF fiscal financial adjustment program. Whereas in fact, what was in effect needed was to recognize the underlying structural root causes, and what Greece really needed was something more of a World Bank type of adjustment program. So you need to get the diagnosis right. And clearly what was needed was a program from the outset that was much more focused on tackling these underlying structural issues, much more focus on capacity building, not only focused on fiscal consolidation, although that of course was needed, but upon underlying structural fiscal reforms to modernize the tax system, to make the social security system more efficient, which focused on institution building, capacity building, and also which focused upon product and other types of reforms, labor market reforms. So we basically ended up, as I said, with essentially the wrong type of program. So without the financial instruments to do it. Now, this type of sort of structural reform type of adjustment program, that requires much more time to deliver results, which means, of course, one needs a larger financial envelope, which was precisely what we didn't have. So my first lesson from all of this is get the diagnosis right from the start. Now, I think, again, if I take the big picture over the entire period, I actually think if I take a look at the 3 programs, I think actually we did demonstrate the capacity to learn, okay? And I think progressively we did recognize these underlying structural root causes, and therefore we started to tackle them over the course of the three programs. Now, I can't go through these in any great detail, but the second lesson I would say is not only do you have to identify the right reform, but you have to implement it in the right way and tackle it in the right way. Now, if I could take some examples, initially a lot of the focus of reforms was to achieve fiscal consolidation, and that would also have been in the area of, say, privatizations and network industries. That was a mistake. I mean, that by construction is a mistake if the underlying problem is structural. So, I think we did demonstrate over time in taking areas like network industries, the first thing to do is to focus upon the regulatory structure to make sure that one has an efficient competitive market structure in place. One needs then to build the institutions to deliver upon that. So that could be something like the regulator. One needs to sort out the interaction with the public sector, public service obligations. One needs to look at the corporate governance of these entities or state-owned enterprises before one even considers some sort of efforts to commercialize them. So in effect, I think we did actually start to put in place, and I'm sure Georgette will talk about a lot more. If you're engaged in this type of structural reform adjustment program, you've really got to sort of do it bottom up and start, step by step and focus upon it in the right way. Another lesson I think we learned throughout over the course of the Greek program is that the social side matters a lot. A lot of the fiscal, I mean, we were aware, of course, of the weaknesses of the Greek social security system. A very fragmented pension system, which was costly but unfair. A healthcare system which did not deliver universal access, and in the absence of a very meager unemployment benefit system which failed to provide a social safety net. I think we did progressively over the 3 programs really start to try to tackle the underlying root causes of that. Now that manifested itself in different forms to unify the different pension systems, a universal healthcare system, which was eventually became operational in 2015, the guaranteed minimum income or the social security income. I think these are the kind of things, but those kind of, I think the lesson I would draw is one needs to ensure these minimum social services or social safety net if you're going to engage in these very big fiscal consolidation, and it should not, we got the sequence and timing of that role. Third lesson I would draw from some of this is, and it's one that I regret, is pay more attention to communication. We, certainly I can only speak from my experience in the Commission, we as the Commission did not spend enough time to communicate, not so much to our partners in the European, but certainly in Greece, to explain the rationale behind the measures which we were advocating and the reforms which we were setting out. I'm not suggesting that in any way this would have made us popular in Greece at any one time. Of course, these were very, very difficult reforms. But I do think there is an audience, or there was an audience there that was prepared to listen to reasonable explanations, that was prepared to understand. And I think by leaving a vacuum in the communication sphere, we allowed more sort of radical and extreme voices to take hold. A couple of other points, and I'll try to keep my comments to 12 minutes. I think one thing which, and I want to come back to the purpose on the political economy and the governance matters. I mean, one of the key features of the Greek system, of the Greek program throughout, was the absence of, let's say, a broad consensus across the political spectrum, or at least in the middle of the political spectrum, to acknowledge that at least part of the root causes of the Greek crisis were in Greece itself, and that this was only going to be solved by Greek society and Greek political parties coming together. For the three programs that I was involved in, every time that a reform was pushed, that we had to advocate a reform, almost every single vote was on a virtual knife edge. And there was quite, political parties did not come behind, to generate some sort of national consensus to try to resolve, again, what fundamentally, there were problems on the European side, but a lot of this was domestic, and the failure for political forces to come together and galvanize was a major issue. I guess the question here actually is, could more have been done at European level to foster, encourage, or cajole a political consensus? That's probably beyond my expertise, but I do certainly think there could have been a role for the European Parliament or for European political parties to have worked further in that regard. Maybe also on the governance, I should say that there were significant, and there still are significant governance problems in the European instruments to provide financial assistance support. These are intergovernmental instruments. They essentially work on unanimity. So you simply cannot proceed until you have every single country, every single minister, every single national parliament, and in some cases it even got captured by regional parliaments in some member states. Now, this proved to be very, very problematic in the Greek case, although funnily enough, not so much in the other programs. The reason why it was problematic in Greece and not the other countries, for the other Euro area countries, there was essentially a consensus about what was the diagnosis of the problem and what needed to be done. So that was a shared consensus also amongst the European institutions and with the IMF. However, when it came to the Greek program, there was not a shared consensus. There was not a shared consensus about the adjustment burden between Greece and its European partners, and there was not a consensus about the need for upfront debt relief. And given that we were working on the basis of unanimity, we could not proceed until we had every single member state on board and we had the IMF on board. So this governance arrangement of full unanimity, it's fine as long as everybody agrees. But if you end up in a situation of a financial assistance program where one party, or for some reason or other, it doesn't agree, you end up with stalemate. And to be honest, the upshot, whenever there was a stalemate, the burden of blame and adjustment was put upon Greece, sometimes quite unfairly. So this is an issue, I think, in our governance framework we need to look at. And maybe I'll just say a final word on debt relief, and because clearly that played a major role in the Greek adjustment programs. Personally, I have to say, I think, is it necessary to have upfront debt relief? Actually, I would say it depends on the type of program you have. Again, go back to the underlying diagnosis. If the fundamental problem is one of fiscal unsustainability, and that's the root cause of it, then maybe having upfront debt relief properly organized can play a role. However, I would say in the case of Greece, I'm not so sure. I'm not so sure. Again, I think the root cause of, again, was underlying structural. No amount of upfront debt relief would have led to the modernization of the public administration in Greece or to the removal of unnecessary structural impediments to doing business and investment. I think there were problems with the execution and design, certainly at the early stages of the debt relief. But the fundamental approach of offering debt relief in return for reforms, I think that was an appropriate balance. And I think that demonstrated itself in the final package of debt relief that was given to Greece in 2018. I'll stop here because I think my time is up. Thank you very much.
Thank you very much indeed. This is very refreshing stuff. I really appreciate the candor, and I can say that as somebody who has co-authored the book on the reform of the Greek tax collection authority, which, as you know, is now independent, quite a lot of what you said are exemplified by that particular process, with MPs of opposition parties saying in Parliament, for example, that by introducing this principle of independence, the then ruling party was selling the tax collection authority to the foreigners, amongst other things, without ever saying anything about the effectiveness of that institution, that part of the Greek state before the crisis. So thank you very much indeed, Declan. Georgette will follow. Georgette, are you ready?
Yes,
you
I
need
am.
to unmute yourself.
You
okay,
have my
let me
slide.
yes, let me share your slides.
So, thank you very much, Dionysis, for letting me speak on the task force, because the story of the task force is definitely a story to tell, and lessons learned have served for the future activities and policies of the European Union and the member states. We are in mid-2011. Greece is already under the first bailout program, and the Troika is imposing severe fiscal consolidation and structural reforms on the country. The Greek administration, overloaded with challenging reforms, could not cope with the strict deadlines imposed on them. The then Prime Minister, George Papandreou, requested the Commission's assistance for the implementation of the bailout obligations, and the task force was established by the Commission, next slide please, in the summer of 2011, and its operation started in September of that year. We had a twofold mandate. Firstly, assisting the Greek authorities in the implementation of the structural reforms described in the MOUs, and secondly, assisting the Greeks in absorbing the EU structural funds monies, because at the time, these were the only sources of funding for growth. It was therefore important that the absorption was at the right level. A third issue was added later, which was immigration and asylum. The Commission made 60 persons available for this purpose. Half of them were based in Brussels and half in Athens. 50% were Commission officials, and the other half were highly specialized temporary staff and national officials seconded to Greece by the member states on a bilateral basis. Next slide, please. These were the 12 policy areas, main policy areas, in which we became active, and they involved around 100 projects. As you can see, the most important by far was the public administration, the red one, and the blue, the revenue, public finances, revenue, and pensions. We made the choice from the outstart to work only with member states and with international organizations as service providers. The private sector was not involved except for academics. Next slide, please. We organized expert missions, workshops, working visits, studies, and training. In some cases, our experts were embedded in the ministries to help with the delivery of the projects on a day-to-day basis. I can say that member states immediately offered their support to the task force and became actively involved, of course to a different degree each, in our operations in Greece. This applies not only to the Eurozone member states, but to all. Finally, as far as the budget is concerned, for the years 11 to 15, we have spent 25 million euros that the Commission made available from the EU budget, while member states paid the salaries of their experts coming to Greece for the different missions. As of 2016, it was possible for Greece to pay for the technical assistance from its own structural funds budget, and it did so with the first tranche of 50 million euros. By far, the most expensive service providers were the IMF and the World Bank. I will stop here with describing the task force. I can come back answering questions. I want to speak a bit about the Greek parliamentary democracy, because after all, this was your subject, and say how we as task force saw the impact of the crisis on the institutions. Our main interlocutor, next slide, our main interlocutor was the government and the administration with whom we interacted on a daily basis. We had decided to act upon request, assisting, of course, the Greeks to identify their needs. It was not always easy for them to know what they needed. We were therefore seen as a helping hand and did not face the animosity that the Troika colleagues encountered. We had no contacts with the Greek parliament, though we met politicians at their request. I think that the Greek parliament refused to meet with anyone from the Commission who was not a commissioner. The same applied to the Troika. Finally, our relations with the judiciary were collaborative. We met with the Professional Association of Judges and Prosecutors in order to learn about their needs, and we also met in person with the presidents of the two highest courts, the civil and the administrative one. The Council of State, the Administrative Court, was particularly important to us as it was able to detect through their case law the defects of the Greek administration. Next slide. If I were, however, to consider more generally the impact of these 10 years of crisis on the country's democratic institution, I would say that the most adversely affected in the public opinion and the esteem of the people was the parliament. People blamed them for being the politicians that brought the country to the edge of the cliff, those who adopted the laws imposed by foreigners, therefore those responsible for the economic downturn and the pain inflicted on the people. As to the government, it was not left unpunished. Starting from 2010 and until 2019, each government that enacted the bailout agreement was not supported by the opposition and ended up losing the next elections. It's not exactly correct for the third, because the opposition to Syriza accepted a lot of what was necessary for the implementation of the third bailout program. By August 2015, when Syriza had to sign the third program, the Greeks had lost all hope of getting rid of the bailouts and of austerity. This brought, I would say, a more pragmatic approach to our public life vis-à-vis the delivery of the third MOU. You can see here, the previous still, Dionysus, you can see here the very intensive electoral cycle for the first 5 years of the crisis. We had 4 general elections, 4 local regionals, and 2 European. The next 5 years with the third MOU were a lot easier in this respect. Now let's go to what it meant for each of the 3 powers. The executive found itself in front of a Herculean task to carry out reforms that were long overdue and the Greek politicians had postponed for years, afraid of the political cost they would have to pay. But hard facts ended up by catching with a society that lived in a dream and was not ready to face reality. I think Kevin especially accurately described the dire state of the administration and of the political parties and their incapacity to reform the country. The usual Greek game of politicizing everything did not work with the creditors, who established the Troika exactly with this objective in mind, among others, but this one was important, not to have to discuss every issue they considered technical at political level. There are pros and cons to this approach. The hard reality, however, is that Greek politicians were faced with a kind of, and I will quote here an academic, an economic occupation squadron of ruling experts. No real negotiation could take place, at least in the first two MOUs that I lived through. George will tell us about the third later. The programs were overloaded and the deadlines untenable for any solid administration, let alone the Greek one. But of course, they had to follow the logic of the budgets allocated to save the country. Successive Greek governments were accused of not taking ownership of the reform agenda. That is true, they didn't. They were blamed and made responsible for the delays in the, let's say, the success that the program should have brought to the economy. But it's fair to say that reforms do not bear fruit so quickly after they are introduced, let alone that they were not always introduced in the optimum way. And to be fair again, commitment is not always easy when imposed so dramatically from the outside and is accompanied by some kind of humiliation for the people and their politicians. And I speak here in front of Declan, and I certainly want to say that he was one of the few that respected my country and the Greeks. I speak here mainly about the first 2 years of the crisis that largely determined the mood of the people for what followed. This being said, and I think Declan said it, politicians during that period have demonstrated their long-standing incapacity to find an agreement on the future of the country. The situation would have been more beneficial for the people had this cooperation taken place. Next, please. It is fair to say also that during the crisis, the legislature became an empty shell. Parliament did meet and did enact laws, but had no say in reality on the choice of issues, solutions, instruments, or timing. Discussions did take place, but had no influence on the outcome. Without the Troika's prior consent, no bill was tabled. Parliament was regularly bypassed through other kinds of national legislation. Almost all politically difficult texts were adopted under exceptional procedures so as to avoid heated discussions and amendments, and of course, the exposure of parliamentarians to the wrath of the people. The exception became the rule. It is worth noting that unlike parliaments of creditor countries like Germany or the Netherlands, who strengthened their powers with the new economic governance of the Eurozone, parliaments in debtor countries had to comply with whatever was imposed on them. Next slide. Let me turn to the judiciary. During the same period, the judiciary maintained some autonomy vis-à-vis the Troika. It took care to not render the country's already difficult condition even worse, and thus ruled that the first bailout agreement was indeed compatible with the national constitution. At the same time, it preserved the constitutional protection of the citizens, overturning Troika-imposed laws that it considered illegal. These decisions concerned mainly salary and pension cuts, but other issues also, like the privatization of water utilities. I have to say that the IMF officials, from my experience, were not particularly keen on respecting the Greek constitution, but even they were careful not to comment in public on court rulings. Before I close my intervention, let me give you some information of what happened with the task force. The task force is still operational in Greece, with an office in Greece, even though it underwent a big transformation in July 2015. It first became a service of the European Commission, the Structural Reform Support Service, and then a full Directorate General for Reforms. Next, it is now a permanent structure, a very important one, I dare say, with its own budget of 222 million initially, up to 865 million for the next 7 years. It is available to all EU member states for the implementation of the policies that the obligation for sustainable public finances dictate. Following the Greek experience, member states and the Commission felt that as all international financial institutions, especially the IMF and the World Bank, have a technical assistance capability alongside the provision of finance, the EU should be able to offer its member states the same service. Unlike when we started, when all of this was unknown and new to us, the experience gained and the lessons learned in Greece, Cyprus, and Portugal were useful enough to be able to create a very effective service for the future. Thank you.
Thank you, Georgette. Thank you very much indeed. Let me stop. Okay. Okay. The first round of interventions will be concluded with and by Dr. George Chouliarakis, who, as I said earlier, came from the world of academia into the world of negotiations and then implementing the third and final bailout agreement. Dr. Chouliarakis, you have the floor. You need to unmute yourself first.
So thank you, Dionysus, for inviting me. It's a true pleasure to be among you and to address a Birkbeck College audience. I hope you can hear me well. So
yes,
let me use part of my time to make a few high-level remarks on the topic. I found the title of the roundtable very intriguing, with emphasis placed on the words limits inside the European Monetary Union. And I want to start by making my first point on exactly this question. If the title implies that policy making and the pursuit of economic reforms outside the European Monetary Union is free of limits, then it's wrong. Limits to parliamentary government and to national policy making would be there either inside or outside the European Monetary Union. In a policy environment such as the one that prevails for about 30 years now, of global capital markets and free capital flows, a country with weak policy institutions, a country prone to generate fiscal deficits both in good and bad times, and a country with substantial macroeconomic imbalances, both fiscal as well as external, would be facing a very high country risk premium, punitive interest rates, and most likely a loss of market access, even outside a currency union. in which case it would have to consolidate, it would have to pursue a policy of fiscal consolidation and reform a lot faster and a lot more abruptly than in the context of the European Monetary Union. We've seen this played out time and again, both in Europe before 2001, especially coming from the peripheral economies of Southern Europe that were facing balance of payments crisis, repeated nominal exchange rate depreciations, and so on. But we are currently facing it also, watching it, witnessing it in the context of several emerging market economies. So limits to parliamentary democracy are not the result of participation in the European Monetary Union, and they would have existed anyway. That's the first point I want to make. My second point is that the nature of the limits that a currency union member experiences is, however, entirely different from the nature of limits and constraints that it would have been facing outside the currency union. So the process within the European Monetary Union is primarily political rather than market-driven, as it would have been outside the EMU, and is primarily governed by what Declan before mentioned as intergovernmental fora. And I'm referring mainly to the Eurogroup Working Group, the Eurogroup, the main forum of the finance ministers of the Eurozone, and of course, the European Council. These are the ultimate brokers of decision-making in Europe, and there are two problems stemming out of it. The first problem is the fact that to reach a decision, you need unanimity. And the second, that to my mind is even more important, is that each of these governments, each of the 19 governments of the Eurozone, maximize, I'm about to use an economist's term, maximizes an entirely different social welfare function. It has an entirely different set of objectives. And those objectives between countries may, and often does, diverge significantly. So at the end of the day, decision-making in the context of this intergovernmental fora is ultimately determined by, is the product, if you like, of the balance of power between different countries or different groups of countries. Let me pause for a minute and compare the process that I just described with a process that would simply involve a purely technocratic organization such as the IMF. The IMF were to run an economic adjustment program in a Southern European economy such as Greece. It would start, as it always does, when there is an issue of debt sustainability, when debt sustainability is when debt is unsustainable with high probability, it would have started with significant debt restructuring. Clearly, in the context of the European Monetary Union, where decision-making is taken with unanimity by governments that maximize entirely, they address different electorates, and they maximize entirely different social welfare functions, this wouldn't have been possible. This was not possible. And you finally end up reaching a second or third best equilibrium at the expense of the country at hand, in this case at the expense of Greece. So my second point is that although constraints and limits to parliamentary democracy within the European Monetary Union are different than to those imposed by markets, in many ways it may lead to suboptimal equilibria. Exactly, it is this suboptimal equilibria that eventually may lead to a bailout program not being legitimated in the eyes of the reference country, in the case of Greece. The democratic legitimacy of bailout programs is, of course, a perennial question. It's not a new question. Economic adjustment programs even if desperately needed, and in the case of Greece, it was clear that it was desperately needed, they always steer a lot of collective anger, discontent, and popular protests. And we've seen this played out in Greece time and again, especially between 2010 and 2015. In Greece in particular, we had 4 prime ministers between 2010 and 2018, whereas in normal times, we would, on average, we would have 1 or 2. And we had as many as 9 to 10 ministers of finance. So why is this? Part of the answer of the lack of democratic legitimacy to bail out programs is that they are often perceived as being imposed by creditors with only one main objective: to ensure that they take back their money. And part of the reason for this perception is the fact that programs are often very costly, both in terms of jobs as well as incomes, and they also tend to increase income inequality. To my mind, if a program were designed with a number of social goals in mind, and let me refer to a few of them, for example, to expand or strengthen the social safety net, to offset the impact of fiscal consolidation on employment by deploying active labor market policies aggressively. In cases, if you like, where you don't have people eating from the garbage, as we had in Greece, all the way up to 2014, I think the legitimacy would have been a lot higher. The democratic legitimacy, the popular legitimacy of the programs would have been a lot higher. But again, we go back to the issue of intergovernmentality, whereby issues such as upfront debt restructuring, or even the size of the financing envelope, are decided on the basis of the balance of power between countries who maximize different objective functions. Let me quickly pass to my third point. And my third point stems exactly out of this democratic legitimacy issue. So there is no, and is more specific to Greece now. I mean, the previous 2 points, I think, can apply to any other country in the context of a currency union. So there is no question that major imbalances in Greece would have to be addressed. I'm referring to the twin deficits, massive twin deficits, as a result of which Greece lost market access back in 2010. There is also no question that weak fiscal and financial institutions needed mending. I referred before to the tendency of successive Greek governments to generate deficits both in good and bad times. One can also refer to tax evasion as a major issue underpinning those deficits. One can refer to poor governance in the in credit institutions, in the banks. All these things desperately needed mending. But I would opt, and I think many others would agree with me, to an entirely different program structure. First of all, I would have started, in the case of Greece, I'm referring to Greece in particular, with an upfront debt restructuring. There is no question that the Greek debt, public debt, was unsustainable back in 2010. And exactly because of the process of decision-making in the intergovernmental fora, this decision was delayed for nearly 3 years. Remember also that in this context, the IMF changed even its rule book so that it will be able to participate in a program without a sustainable debt, something that the IMF wouldn't have done in any in any other case. So I would start with an upfront debt restructuring. I would have opted for a far milder fiscal path, if you like, a more realistic and therefore a more credible fiscal adjustment. A credible fiscal adjustment would have allowed a faster acceleration of the Greek cost of borrowing, and therefore would have offset the negative consequences of consolidation on output and employment. And importantly, I would have opted for a much shorter list of reforms with a different sequencing. Tax evasion would have been clearly a priority, and tax evasion was not successfully addressed over those 8 years of bailout programs. Justice, public administration, and building capacity in public administration and digitalizing public administration would also have been a top priority. Where, if you like, the benefits of reforms are obvious to everyone, and therefore you can then build popular consensus and support for those reforms. And by building consensus for successful reforms, this allows you to take a step further and do even more, and so on. So by so doing, I would have avoided reform fatigue and an overloaded public administration. Fourth point, and with this point I will conclude my initial remarks. Key difference between Greece and the other countries over the past, in the past 10 years, was first that the initial disequilibria, the initial imbalances in Greece were significantly higher than in any other program country, and therefore the starting point for Greece was a lot worse, and Greece needed to do a lot more to be able to correct those imbalances. I'm referring both to flow imbalances as well as to structural weaknesses, fiscal, financial, and other weaknesses. Point number two, no other country needed debt restructuring, whereas the Greek debt was clearly unsustainable as early as 2010. But a third difference between Greece and the other program countries was the lack of consensus among the main political parties. At the end of this 8-year period, there was at least a common framework within which to discuss and debate, because of course it's legitimate, totally legitimate to have different views and disagree. But for most of that period, there was not even a common language as a framework within which to debate and identify policy differences and so on. And this lack of consensus, I think, was also part of the problem, and something that needs to be, and to a large extent it has to be addressed, is one of the positive legacies, I think, of the 10-year crisis in face of any future financial trouble. Maybe I should stop here.
Thank you very much indeed. Fascinating intervention. We already have several questions that have been asked. I've got a few to add myself, if I may. But prior to doing that, I would like to ask Kevin if he wants to intervene now with some comments on the first round of interventions, or whether you want to wait until we can gather more questions from the audience.
Yeah, let's let the discussion flow, and I'll come back at the appropriate time.
Okay.
I've enjoyed the presentations.
Great. Okay. One of the joys of teaching at Birkbeck is, as some of you will know, is that we have people who have real-world experience from the phenomena that we tend to analyze as academics. And I'm pleased to say that one of the members of the audience is one such person. Dilwyn Griffiths is a doctoral student in the Department of Politics and a former Treasury official. And he has one question that touches on both what Mr. Costello said and what Dr. Chouliarakis said, and also touches on one of the ideas behind the choice of words in the title of the workshop. The question is as follows. Declan Costello mentioned that more of a World Bank type structural adjustment program was needed for Greece. If the EU had come forward with that, what were the chances of finding willing partners within Greece to implement that? And how do you square the circle between ensuring necessary measures are undertaken when there are entrenched domestic interests without being seen as an external dictator imposing things on a state? So we can start from Declan, and then if any other member of the panel wants to contribute. Yes, Kevin, okay.
Okay, well, a nice easy question to begin with. Okay, where do I start? Look, I think the first point is, I mean, my experience in Greece is it's not a binary. You don't face this binary choice in front of an administration. You face some people in an administration which are prepared to do reforms, like George, whom we're talking to, and others who are resistant to change. And the only way but the problem is we have to negotiate a program as a whole. And really what you need, the only way around that is really to have very firm leadership from the very, very top of the government. The Prime Minister, the Minister of Finance driving this through. And so I think in the answer to Dylan, you can get some things done, but unless you really have the full support of the Prime Minister, the Minister of Finance, who have some sort of security or consensus in Parliament that they can get things done, you can make progress on individual policy areas, but it's very, very hard to make consistent progress across the board. The second point I would just, in response to Dylan's question, is how can you cannot, I mean, you cannot progress on these areas. I mean, if you insist on these without the domestic political consensus or ownership of them, there's no other way. You will be perceived as an external imposition. That is, I think that's inevitable. But what was unique in Greece is that you had this, I won't say across the board, but fairly universal denial that most of the problems were structural, most of them domesticated. And okay, there were some faults on the side of the European institutions, but they were only going to be fixed if the country or if the government got behind and did it. And that's what happened in every single other country. They didn't like us as Troika. I mean, I wasn't involved that deeply in the other countries. I was involved in one or two other countries. When I would go on mission, you know, there was tension, there was difficulty, but the opposition or the distaste of having Troika officials in your country, this translated into more like effort to, we will do these reforms quickly and get rid of these people from Brussels as quickly as we can, as opposed to antagonism. So I think, so in response to Dylan's question, it's an impossible circle to square. You cannot succeed in this type of initiative unless you have ownership, some sort of consensus politically, some sort of ownership. If that doesn't exist, you're in for the long haul. Thanks.
Thank you. Kevin?
It's always difficult, of course, to resolve counterfactuals. What if? And I agree with some of the points that Declan has just made. But the reference to a World Bank program, I take as meaning a program, an alternative program, which would have had more time, better prioritization, and therefore more targeting. So on that basis, I'd have thought that at the early stages, indeed in the first bailout program of 2010, there could have been a scenario in which there could have created much greater domestic support. Remember, in 2010, until the end of that year, the political support for the existing government rose very significantly. The Papandreou government was very popular for much of that year. I think the difficulty came with some of the targeting, undermining the reform cause. It's a small example, but if I could simply cite the case of, I think, the second program, insisting that there should be some significant number of firings from the public administration. This is a target which was really led by fiscal adjustment logic rather than anything of the needs of the public administration. I would question how many other member states during this time period were busy sacking public servants. It becomes, in other words, politically difficult to sell domestically. And what is the cost? It destroys careers. It destroys the standing of those who might otherwise support the structural reform that we're talking about. Now, I appreciate these are counterfactuals, but if we're posing some kind of separate World Bank program of that type, then I think a historical argument could be made that it would have won greater domestic support. Thank you.
Could I
Just make a
come back
couple
quickly on that point?
Of course.
I mean, just if I can just really on
Declan
the
first
specific
and then
point, because
George.
it's a good example. When I mentioned you need to do the right reforms and you do them in the right way, this was an example of the wrong reform in the wrong way. It was an irrelevant reform in the sense of it was basically the size of the public sector headcount had already been diminished by about 20% by that time. In this issue of establishing a principle of firing in the public sector, okay, was of irrelevant fiscal benefit and major social fiscal cost. And it was driven by ideologically driven preferences that one, in order to proceed with reform, one needed symbolic reforms. And it was directly stemming from what I said about this unanimity basis approach. It wasn't I don't think this is about a design issue in the system of programs. It's a governance. This is fundamentally a governance problem that everyone had to agree, otherwise we couldn't move forward. Sorry for cutting across you. I beg your pardon.
Thank you. George.
Yeah, no, I just wanted to follow up on what Declan said just a while ago. And let me go back to my initial remarks. The probability of the democratic legitimacy and the ownership of a bailout program depends critically on the structure and the content of the program. And then in turn, the content of the program in the context of the European Monetary Union depends critically on the balance of power in the Eurogroup and the European Council, exactly because of the nature of the decision-making process in Europe, because of the unanimity principle on one hand, and on the other hand, the fact that different governments are accountable to different electorates. It's bound to happen. They are bound to do what I said before, maximize a different objective function. So let's see how this played out back in 2010. So this implied that everyone had to be in denial of a serious debt sustainability problem. And I'm not disputing that also the Greeks were in denial of deep structural issues of the Greek political economy. I'm 100% clear on that. But there was also a lot of denial on the part of other European governments of the debt sustainability problem. So they agreed to hide the problem under the carpet, right? In order to have a program where numbers add up without debt restructuring, they had to make extremely ambitious assumptions on primary fiscal targets, on near-term growth, and on privatization as well. So the program was bound to fail from start. Once you have 2 years of pain with no results, this feeds back into even further delegitimization of the bailout programs. It's a snowball effect. And you end up having a lost decade, and Greece being the black sheep of Europe. So again, I think one has to go back on the way decision-making is taken in Europe, and maybe also to political actors. I mean, if we had another set of political actors in the place of the existing ones back in 2010, if Gordon Brown, for example, was present, or other social democrat leaders of the 70s or the 80s, maybe the course would have been different. But, and you know what, and I'll finish with this. At the end of the program, and Declan may be able to confirm this, at the end of the program, as a result of this decision-making process, the spirit of solidarity in Europe and those European fora was nowhere close to where it was in the 2000s, following the introduction of the euro. Everyone was looking at how they can take from the table, rather than how much they can take and also give. Nobody was looking for a compromise. And this is how I left Europe back in 2019. I don't know how much it has changed. Hopefully, yes, but that was my experience.
Okay, Georgette, do you want to contribute something to this part of the discussion, or shall we proceed to the next question?
No, I've been covered by what has been said.
Okay, one question that Mr. Trifilis, who's in the audience, would like to ask. Mr. Trifilis is a former EU official, is whether a similar austerity program could be envisaged given Greece's debt, but in the post-COVID period.
Not quite sure I understand the question.
I imagine it's for Declan.
Dionysus, we cannot hear you. You're muted.
Sorry. The question is, do you think that we could envisage a new austerity program after the COVID crisis, given our debt?
I can have a go.
Please,
Yep.
George,
All right.
get me off the hook.
My take is that if you look at the stock of Greek debt to GDP is clearly extremely high, as it is the Italian, and the Spanish and the French is not far away. Clearly, the Greek is standing out. But in the case of Greece, the debt-to-output ratio is not a good indicator of debt sustainability. Exactly because debt is in the hands of the official sector, maturities are long, the cost of borrowing is in concessional terms. My take is that the Greek debt is sustainable going forward, despite a very high debt-to-output ratio. There is, however, a big risk. If Greece doesn't manage to rebound and recover quickly with robust growth rates over the next couple of years, then indeed, debt sustainability risks may re-emerge. And I think this should be the priority of the government, of any government in Greece, a swift return to economic recovery, relying exclusively on the Recovery and Resilience Fund may be misleading for many reasons that I'm not going to discuss now. And therefore, the government has to do as much as it can to support growth and help the economy rebound quickly immediately after the pandemic. Otherwise, indeed, we may end up in a very tricky situation.
Could I
Thank you.
come in?
Declan?
Yeah,
Go ahead, yes.
I actually agree with George in terms of the debt sustainability risks. The very low interest rates facing on Greek debt, plus the fact that most of it is held by European partners with very, very long maturities, means that the interest servicing costs are extremely low for well, at least until 2032, maybe even longer at this stage. So I think the risk of an immediate, of a debt crisis anytime soon is actually quite low. However, I also concur with George that the critical issue is a rebound in growth. So that, in a sense, Greece is kind of, it's been an unlucky country and a lucky country. In the sense, it's unlucky in the sense it has come out of its program, unlike Spain or Portugal, at a time when the global economy and trade started to contract. And that's unfortunate because the growth model of Greece really does need to change to become a sort of an export-led growth system. So, and now, of course, the pandemic has come in, and that's just, I don't know, it's just bad luck. What can I say? At the same time, Greece has been lucky in the sense that it's come out and the debt restructuring discussions occurred against the background of very low interest rates globally and a savings for different reasons. But I think the critical issue really is indeed, you know, and I think Kevin had a slide at the end and he said, what's the conclusion? And he said the jury's out. Actually, you know, whether the Greek adjustment program is a success or failure, it is actually too soon to call. It will really depend upon the sustained implementation of policies and the recovery of growth. I think the recovery plan can help. I mean, currently I'm involved with the discussions with the Greek authorities on this. It is a lot of money. I mean, it's about, I mean, just in terms of the grant component alone, it's about 10 percentage points of GDP, which can be transferred to Greece over over 4 years or something like that. So it is additional investment and spending of, you know, plus or minus 2 percentage points of GDP over 4 or 5 years. So and what's been lacking, of course, in Greece is indeed investment. It's in and of itself, it will not, you know, it's not a silver bullet. It will critically depend upon how efficiently that money is used, whether private investment can be crowded in, and whether it can be combined with good reforms. Thanks.
Thank you. Kevin, I know you need to go. Do you want to intervene now and respond, or?
Kevin, you're muted.
Yes.
I think my contributions are better when I'm muted. 2 quick points, if I may. We're dealing with hypotheticals, whether Greece might need an austerity program in the 2030s to deal with a debt problem. Who knows? COVID is changing the landscape. I think from the political science point of view, what I would suggest is that in the medium term at least, I question whether the European Union has the political capital to be seen to be involved in, quote, imposing an austerity program. Clearly, the European Recovery Fund represents a different mindset. I think the more interesting question becomes, what if the European Recovery Fund fails? Indeed, what would we mean by such failure? We've seen in recent times people like Wolfgang Schäuble coming around to the idea of the recovery fund, so long as there is the appropriate prioritization, the digital economy, climate change, etc., etc. Well, what if in the medium to long term, in our different domestic politics, there is a sense that the European Recovery Fund didn't achieve its objectives? Then I think in those conditions, we would be facing a different review of what could be done in terms of conditionality, in terms of insisting on programs. Thanks.
Thank you, Kevin. George, yes. If you want to come back.
Other questions, then we would rather use the time for other questions.
Yes, if I can ask one question on behalf of the audience, it sounds like a question of principle, which could also be a question of ideology. Given the volume of debt of the country, where it is now and where it was in 2010, should Greece continue on the same path?
On the same path, meaning?
well, the reforms that have been introduced and carried out over the past decade?
I took that there was some consensus in the discussion that, with hindsight, the reform program would be different. In other words, I think there was a consensus that in the heat of the crisis, there was too much short-termism, too many targets, the wrong priorities, etc. So it isn't a question of going back to 2010 and just doing it all again because it was so much fun. It's more a question of having learned from it, and I think there is more consensus. Our colleagues have been talking from real-world experience. We could also point to some of the reports that have come out. The last year's European Stability Mechanism report, the IMF's own Independent Evaluation Office report, the European Court of Auditors. It's all really channeling, heading towards some consensus of past mistakes and things to do differently if there was to be another occasion.
My sense, and that's my interpretation of the question, is that it related to austerity. But I'm happy to ask a question, if Declan is willing to answer, a couple of questions about the Commission, because there is the European level as well. And one facet of the question is, why didn't the Commission communicate differently at the beginning? What is it about its role or the institutional position of the Commission that made it not communicate? And the second question, if I may ask, is over the past decade, as Georgette's contribution demonstrated, the capacity of the Commission has changed to deal with these things. What is your assessment of the current capacity of the Commission to deal with these issues?
Okay, they're tough questions. Why didn't we communicate more and better? Look, I think there's probably two main reasons. The first is when we ended up in Greece with the financial assistance program in 2010, it was new for us. So we simply weren't used to, we didn't have the experience in running these kind of assistance programs, neither in terms of the economic policies, the financial instruments, but also in terms of the communication. And, typically the Commission, let's say our communication, or a lot of it, our policies have been involved around, the EU budget and spending money, structural funds. These are nice things to communicate. They're easy things to communicate to some extent. But when you're talking about a financial adjustment program, you're talking about, fiscal consolidation, reform of the pension system, reform of the labor market. These are hard communication. They may be necessary. You may be able to build up economically a good narrative, but it's not traditionally a role that the Commission was used to doing and was comfortable with. I mean, the European integration process was not built. Was not built around tough messages on austerity. It was built about solidarity and stronger together. So we had to learn on the job, and unfortunately, it took us a bit of time to do that, I think, personally. The second reason is the governance. I want to come back to this governance and the unanimity. There were very difficult discussions with some of our member states on essentially burden sharing. How much should the contribution come from fiscal consolidation in Greece, and what contribution should come from European taxpayers in terms of debt restructuring? This led to tensions amongst the institutions, principally, I would say, between the Commission and the IMF, on this issue, but also on how we approach some of the very difficult reforms. And Kevin mentioned an issue earlier on where we had a disagreement. However, it would have been very, very difficult for us to communicate publicly on that, to communicate these differences amongst institutions, differences amongst member states, was a difficult issue to communicate. So the governance structure itself hampered our ability to communicate. Again, I'm not trying to sort of, let's say, obviate or whitewash. I think we could have done more. We had a narrative we could have sold, but so that you understand a little bit around the context around that. But it is a relevant consideration, I think, going forward, because I've seen some comments in the slides on the recovery fund, and Kevin has mentioned on whether the commission is, whether this is really a turning point. The recovery facility is actually quite important. I mean, it is a departure. It's a very, very significant amount of money. It's approaching the problem, if you will, from the other side. How do we financially support difficult reforms and investments? How do we not just talk about digitization and the climate transition, but put some real money behind it and showing solidarity? But there's the other side of that is, throwing money at problems is only part of it's not in and of itself will not find solutions. There is a reform component to that. And one does need to be able to say, well, one needs to sort of push some of these reform issues. And so I think these lessons on communication, even if they were in a more extreme context of a program and more difficult, I think they are relevant when it comes to the recovery facility. Thank you.
And what about the Commission's institutional capacity?
I would say when we began with the Greek program back in 2010, I won't say we'd no experience. We had some limited experience from balance of payments in Latvia and Hungary, but no real experience. We did not have the technology that the IMF, and that's why it was essential to bring the IMF on board back in 2010. We didn't have the financial instruments. We didn't have the technical expertise. I think relatively quickly, we acquired the kind of expertise to run a program. And I just want to maybe underline how, the impression that it took us a long time to react. I don't think that's actually true. If you really look back at the very first MOU, there are structural reforms. The task force which Georgette was very heavily involved in, that was set up in, correct me if I'm wrong, Georgette, maybe it was October, November 2010, 6 months, 8 months, was it the official setup? I see Kevin shaking his head, but it was a relatively short space of time, maybe in the context of the commission, in terms of commission working methods, but it wasn't years. So I think, you shouldn't, don't underestimate the capacity of the commission to sort of move quickly in these areas. Okay, I'll stop here to this one.
Thank you. Georgette, do you want to step in?
No, I think we were very quick, but it started in July 11. The letter of George Pandreou was in July 11, and we were almost ready to work in early September 11. So it took us the summer break to prepare. We had the people, we had almost everybody in mid-September.
Okay.
Yeah.
Kevin, George, do you want to say something about this, or can we proceed with the next question? No. Okay. I see Mr. Karbounis, who's a former Commission official. He used to head the Athens office of the European Commission, has raised his hand. Perhaps we can make an exception and ask him to ask the question or make the contribution directly instead of asking him to type the question, which is what everybody else has done. Mr. Karbounis, do you want to unmute yourself and ask the question?
Oh yes, am I audible?
Yes, we can hear you now.
I think that
Mr.
now
Kakounis.
I think that now you could listen to me.
Yeah.
Okay, I have raised my hand by mistake, I must say.
Oh, I see, okay.
But I take advantage of this possibility to stress what Georgette previously said concerning the involvement of the Greek Parliament during the Greek crisis. It was not accepted by the Greek Parliament that any of our senior officials come to the Parliament and explain their job. Although this was foreseen in the different regulations that senior officials could report on their job. So I have contacted the Parliament many times to allow Declan Costello and previously Matthias Morse, his predecessor, to join the Parliament and to explain their job. I have done the same concerning Horst Reichenbach, who was the leader of the task force for Greece. In all these cases, the Parliament denied that persons who are not at the political level, meaning commissioners, could explain, could report to them. And I must say that they told to me that this would raise a lot of problems as at that time in the Parliament, you had not only the present parties represented, but also Golden Dawn, which was the fascist neo-Nazi parties, which then disappeared. So the Parliament was not ready to receive and to hear and to ask questions on those who were managing the program. They preferred to keep it at the political level, and at that time it was Commissioner Moscovici mainly who was the interlocutor and who made the presentations at the Parliament.
Thank you very much indeed. Any questions or concluding comments from the panel this time?
I can make a couple of comments very quickly before we close.
Yes, go ahead.
I think it's a common conclusion that the design and implementation of bailout programs in the context of the European Monetary Union is to a large extent an exercise in political economy. It's an exercise in distributing the costs of adjustments between different actors. So, on one hand, you have the question of primary surpluses and how they should be. The flip side, of course, is how big the debt restructuring should be. So whether it could be the domestic electorate or the rest of the Eurozone who pays for the adjustment. You also have a dilemma between smaller or bigger financing envelopes. And to a large extent, it's a discussion about lesser or more social cohesion. And you have the dilemma between more state or more efforts in order to send your debt on a sustainability track. Now, the way you addressed those dilemmas, those political economy dilemmas, was clearly not satisfactory. There is no question that a new crisis will sooner or later come. Crises always come. We don't have. If Europe doesn't invent a new, more effective way of dealing with what I called before divergence in the maximization of objective functions, animosity will emerge, and it will be the second time around. And that will it's clearly an outcome that nobody wants. And I think there should be a lot of work going in this direction. And finally, talking about the adjustment program, whether it was successful or not, or whether the jury is still out, as Kevin said, I'm a little bit more I think we have the evidence now. If the pandemic had hit Greece in 2016 or 2017, can you imagine the state of the economy and society? Greece is clearly a lot stronger following the end of the program in 2018 than it was at any point before. With healthy fiscal aggregates, with debt restructured, with a sizable cash buffer, with market access, so a much better point of departure to deal with the new crisis, such as the pandemic, than at any point before. So I don't think the jury's out. I think the bailout program at the end of the day succeeded, and it's now up to those who govern to make sure that those successes are strengthened and carried forward.
Thank you. Georgette and then Kevin. And Declan.
Yes.
Declan wants to.
I want to answer Kevin's last question and say that I do not think that Greece could have managed to reform itself without a conditionality. This being said, it should have been the right conditionality. I therefore agree with the lessons learned from the three programs as Declan described them. I simply regret for the lost opportunity the country had. 10 years after, we still do not have a functioning administration, well, and many other problems, education, health, whatever. So I regret the lost opportunity.
Kevin.
I agree with what Georgette has just said. Let me just try to make 2 points. I also agree with Declan's comment about the overloading of the European Commission. We have an institution which was never designed to be put in this particular place. It isn't that there's a problem of legitimacy now. It's that this is a structure which was never meant to be in this position. And think of this in the context in which, prior to the crisis, Greece had, on a long-term basis, some of the highest levels of support for EU membership. More politicians describe themselves as Europeanizers than in most member states. But my second point, I think, is that we do need to work out some kind of institutional mechanism for the future. And I make this point generally, it's not a Greek-specific point. If we look around the EU of the 27, then surely a reasonable assessment would be that if the agenda is of reform, we have a number of member states who are probably incapable of enacting the necessary reform. There are cases much worse in this respect than Athens, much worse in this respect. The challenge then is, how do we create a political structure which avoids some kind of multi-speed Europe being solidified with an outer excluded ring? And how do we create a political structure in which there is the kind of democratic legitimacy that several of my colleagues have been rightly talking about? We remember, of course, in January 2015, the Vice President of the European Commission at the time, on the day after the election of the Syriza government, made the comment, "We don't change policies because of elections," something which Wolfgang Schäuble also elaborated. It's an excellent comment, but it goes straight to the heart of how we have a political structure, a legitimation for decisions being taken, which go across the different levels. And I honestly think that, independent of the Greek crisis, the biggest challenge in the upcoming decade for the European Union will be how to avoid entrenching a multi-speed Europe and consigning some of the outer members, geographically outer members, to the slow lane. How do you avoid that? We do need some kind of governance reform and some new kind of instrumentation so that reform, support, conditionality, whatever it might be, something becomes more legitimate. This is a political system which is still overwhelmingly shaped by the legacies of the 1950s and 1960s. The European Union will need something quite different in years to come.
Thank you, Kevin. Declan, concluding remarks?
Yeah, well, let me make some concluding remarks on Greece and then on the European Union. I mean, I think for Greece, I'm going to nuance what I said on whether the program was a success or failure, whether it's too early. I think it, in my view at least, it's a success in the sense that I think the reforms and the debt relief so far, it's sufficient to stabilize the situation. I don't think there's much of a risk of a major fiscal crisis anytime soon. Is it a success in the sense of ensuring that living standards in Greece are on a pathway that they would converge to the European average? There, I think the jury is out a little bit. Because that really will depend upon the reform of the public administration, the justice system. I mean, following through on all of these kind of deep structural reforms. And just one thing is, you know, we've been presenting this, it's been one long series of reforms since 2010. It hasn't. It's been a stop-start reform. Reform would start, then there was a crisis, they would stop, you go backwards. It's been 2 steps forward, 1 step back, 1 step forward, 3 steps back. What's been lacking is a sustained implementation of reform. So I'm not worried about, I think in terms of a crisis, I would think it's a success. Whether it will be a sustained success in terms of convergence of living standards, honestly, that will depend upon the implementation of reforms. And to be honest, 90% of that is in the hands of the Greek authorities and the Greek people. The recovery plan can help that, but ultimately, I do think it will come down to whether the Greek administration and the Greek political system has managed to adapt itself. In terms of the European Union, are we capable of facing the global challenges we face and crises in the future? I mean, I have some grounds for optimism, I have to say, for several reasons. I think the first thing is my experience of the Greek program is don't underestimate our capacity to learn. We may have made mistakes, and we certainly did in the earlier start of the program, but we actually did manage to up our game a bit and make adaptations. Also, I think at the end, don't underestimate the solidarity that can be exhibited when necessary. I mean, that was shown, I think, also at the end of the Greek program. I think also we are in a better place to face certain types of economic and fiscal and financial crises going forward. We have, you know, some of the steps to shore up the banking system have had a benefit. We have instruments through the ESM, which again, my personal view, are relatively strong for dealing with the kind of, let's say, traditional fiscal financial market types of crises we may face. I do, however, wonder whether if we had a Greek type of structural, I mean, where the problem is genuinely related to underlying structure of an economy or, you know, real problems in the administration and justice system, those types of programs are inherently more difficult to deal with. And there I wonder, we just about maybe survived Greece, but I wonder if we could handle something of a bigger magnitude. But then again, I come back to our ability to adapt and learn, and then I would, the Recovery and Resilience Facility is a major step forward. Its success, or will depend upon implementation, whether those those funds are wisely used, whether they're accompanied with the necessary reforms. So I personally, I'm kind of a half glass full, but that's not to say that the challenges aren't significant. Thank you.
Great, thank you very much indeed. It's 8:15 in London, 10:15 in Athens. As the organizer of this event, which is the first roundtable of the Jean Monnet Chair in Parliamentary Democracy and European Integration, I would like to thank all of the contributors and certainly the members of the public, the audience who asked the questions. If I can add a personal note, if all of the events that I'm planning to organize go as well as I feel this one has gone, I will be a very happy man at the end of the 3-year period. Thank you very much indeed. The event has been recorded. I will happily send you the edited video at the end when it becomes available next month. In any case, when it is available, it will be uploaded on the Jean Monnet Chair's website, so members of the audience, the public, can benefit from it. Thank you very much indeed. And in the digital era of the pandemic, perhaps we can show appreciation for the panelists by raising our hands or making some noise. Now you are all unmuted. You are allowed to be unmuted if that's what you want to do. Thank you very much indeed.